What if I was to tell you that the Australian economy is in the worst shape it's been in for almost 30 years, but prices are at an all-time high across Australia? It is an absolutely warped world, and I want to make sense of it here on this channel, so if you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency and financial freedom. The latest GDP figures here in Australia are saying one thing, yet property prices are doing a completely different thing. If we were to look at this just in isolation and just said, okay, prices for Australian real estate, all-time high, we're going up every single month, you would assume that the economy is also doing well. But on the flip side, if you saw the economy and the numbers on that side, you would think prices were probably tanking. And that's not the case. And that's why it's so important that you don't just think that what the economy is doing is what the money markets or asset markets will actually do. An example of this is that when you actually saw in 2020 the numbers for the GDP growth and inflation numbers, you would have said the economy is tanking, but prices were actually going up during that time. And there are so many occasions where this has happened over the last 50 years in Australian real estate. That's why it's so important. You just shut out the noise when you see, oh my God, the world's collapsing. Oh my God, the economy is going to collapse. That means property prices collapse. It doesn't actually work like that. Now, yeah, sure, there are a few times where those things are correlated, but it's not as simple as saying, well, interest rates are so high, people can't spend money, therefore property prices need to go down. Because we've clearly seen over the last 18 months, that's definitely not what's happened. So let's go through some graphs and data around why the Australian economy is suffering and why it's important the RBA pays attention sooner rather than later, especially when it comes to interest rate cuts. Australia's economy grew by 0.1% over the first 3 months of 2024 and 1.1% over the year, according to the ABS. Treasurer Jim Chalmers said it wasn't a surprise to see the economy barely growing, but Australia is still doing well, better than comparable countries. The primary cause of this very weak growth was high interest rates combined with moderating but persistent inflation and ongoing global uncertainty. But any growth is welcome in the domestic and global circumstances we confront. And what we can see is a high of 3.9%, and ever since that, it's just looked pretty depressing. I'm going to go as far to say the next quarter we should see this number go into the negative. And this would be the first time we go negative since late 2021, and previous to that it was during the lockdowns. And that's why it's such a big deal, because you can't have the economy collapsing and then say, well, interest rates need to stay higher for longer, because yes, we know the RBA looks at inflation between 2 and 3%, but you also need to have an eye on the GDP. Because if you have the economy shrinking and you have high levels of inflation, we go through something that's called stagflation, and that is not welcomed at all. But what's even more interesting is that this number is not really accurate around what's happening in terms of a reflection of the economy. What we need to be looking at is a per capita basis. And all that means is basically the GDP divided by the number of people that are in that country. And why the GDP is still holding up, to be honest, is because we've invited so many people into this country. So let's look at that GDP relative to the amount of people in that country. For the 5th consecutive quarter, economic activity declined on a per capita basis, and the 1.3% decline over the past year is the largest Australia has experienced in 33 years, excluding the pandemic. Okay, so this gives a more accurate reflection, because what this suggests to us is that the economy is only recording a positive number, albeit 0.1%, is because we've invited so many people via migration. And so when we think about housing solutions or solutions for the housing crisis, we often go straight to, well, just cut immigration. It's pretty simple. But if we were to cut immigration, what do you think happens to the GDP number? And as this GDP number goes into a recession, which is 2 consecutive quarters of negative growth, it could then find itself into a depression, which is 4 consecutive quarters of negative growth. When you have that, you better believe the RBA is going to be under pressure to want to cut rates very, very quickly. Now have a think about it, right? If your interest rates are higher relative to they were 2-3 years ago, it means that you have less in your pocket to spend on going to the cafes, buying things, and retail is basically in the toilet. And this is what I've been saying for the last 6 months is, look, maybe we need to cut interest rates earlier rather than later. And yes, it's not very popular, especially when inflation's so high, but you also have to look at trends. I talk about this a lot when it comes to property investing. So you look at a property and you go, oh, well, okay, it's grown by 5%, but what's the trend look like? Has it been growing by 5%, 10%, 12%, or has it started to slow down? You also need to look at trends when it comes to supply. So if you go, oh, well, there's only 200,000 available in this place, and now there's suddenly 20,000 available, that means that we could find ourselves in severe undersupply very shortly. And that's why it's really difficult being a politician or working at the RBA, because they almost take a snapshot of what's happening right now, but they won't really calculate what the trend looks like and start forecasting to make that move moving forward. A classic example of this is during the lockdowns, where you started seeing inflation start to pop up, and yet interest rates stayed at record lows for a lot longer. It was around that time that the former RBA, Philip Lowe, came out and said no interest rate increases till 2024. But in the meantime, inflation kept increasing. Right now, we have inflation decreasing when it comes to quarter on quarter, yet we have interest rates at a really high level relative to the last 5-year average. And this is why it's important to pay attention to trends. Another example of this would be when you go out to buy a property and you look at vacancy rates. It's essentially looking at a suburb and seeing how many of these properties are vacant and aren't tenanted right now. If that number is below 1%, you have a rental crisis. Now, a lot of places, especially in and around Perth, you've got areas that are at pretty much 0 or less than 0.1%. A 3% number is where a balanced market occurs. That's what I was acclimatized to when I started investing in my early 20s. Now we're at a point where 1% is the norm. We have a rental shortage and we have an overall housing shortage. Now, if I'm a retailer right now, the one thing that I'm scared about is if immigration falls. Because if we suddenly have the government cut immigration, yes, that might put easing pressure on the housing market, but it won't really do much for retail sales. And this graph here shows a really bleak picture. What we can see is that retail sales are at the lowest point on recorded history from what I can see. And that is scary, because when you have these numbers come out the way that they are, it means that retailers are going to struggle. And when they struggle, they're going to let go of staff. And if they let go of staff, unemployment goes up. Now, what's interesting is unemployment is a number or a metric that the RBA is actually looking at. They said that they want 4% unemployment. Once they get there, they'll reconsider their stance when it comes to interest rates. So in my opinion, based on what we're seeing so far, we could be closer to interest rate cuts than most think. And the media will chuck you in a frenzy saying, well, no, inflation's so high, let's focus on negative news because, hey, transactions are low, nobody's buying property, let's just kick the can down the road. But on the flip side, while everyone's getting really excited that migration's gonna get cut, we could find ourselves with the economy just spiraling down where there's no growth anymore, and that's when they're gonna have to stimulate the economy. The big takeaway from this entire video is that do not get this mistaken. If you simply think that the economy goes through and slows down, that means prices should slow down, the opposite could occur and it could catch you by surprise. If you're interested in getting help with the right people and the right team, then definitely reach out to our team. We'd love to help you get into the property market with speed, get into a property, prepare for what's about to come, because personally, I think prices are going to go much higher, but I'd love to know what your thoughts are in the comments down below. I hope you guys have enjoyed this video. I'll catch you guys in the next one. Thanks, guys.